Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Thursday, October 21st. We're going to take a look at Desktop Metal, ticker symbol DM. So DM has gone through quite a beat down lately. You see this run up here near $35 almost, down to $6.70 here at pretty recent lows, and just kind of starting to work itself through that. So what I wanted to do today was run through a bunch of indicators while we're on this blank chart, and then go in and chart some supply and demand zones or trend lines, whatever is sort of presenting itself. I'll look at some potential plays or some potential pivot points that might be coming up. And then we'll take a look at the data and see what the data is looking like for DM. So definitely an interesting company. It came aboard via SPAC. It was what it looked like to me, formerly Trine Acquisition Corp. But additive manufacturing tech. So this is, I think, going to be coming to the public sphere more and more and more. I was doing work a few years ago, like 2017, 2018, that sort of had some intersections into that space. And there's definitely a lot of work coming aboard in that arena. So let's kick it off with the indicators, like I said. So let's start with some ones that we're just pretty familiar with. So let's go MACD, and we can zoom in on these quite a bit more. So you see the MACD here sitting well under the baseline, recent bullish crossover. This is on the daily, but we see that has happened several times before and hasn't really yielded much of anything, right? Overall, the price that was here fell even further, even though there were a slew of bullish crossovers in between. And I think the thing to kind of note here, though, is that there's this low here, even when the price was way up here, that has consistently at swing lows on the MACD. I know we talk about swing lows for price action, but talking about swing lows here on the MACD has continued to swing higher. Now the question is, will this, like right where it is now when it's on its upswing, will this swing high be higher than the previous swing high? So the swing high and low previous, it's higher than the previous ones, but swing high, want to see that stretching above too. So that would put it probably needing to test the baseline on the MACD to see if it's able to sort of make a push above and beyond there. So interesting sort of setup on the MACD, but like I said, it's going to need some oomph to get there. Now RSI, similarly, we see it sitting here about mid-range, right? And we've seen it reach mid-range before. And this is something we've talked about in prior videos when we talk about the RSI. To me, the real key components to the RSI, unless you can establish some other pattern with a certain stock, is what happens at that midline. And that midline is 50. So is it coming up to the midline and rejecting it, much like it would a price zone? Or is it coming up and able to get support over the 50 and hold it, right? It tried to do that here. It came up over the 50 slightly, came back down for a retest, and then made a lower high, and then fell back through, and then that fall continued. And so this is a really critical moment on the RSI for sure to see if it can resist slipping back down through 50. So that's what I'm looking for there. I mean, the MAs aren't that helpful to look at because, for example, the 180 MA is all the way up here. I mean, we could throw some others in there just to see what they're looking like. We could throw the 20 and the 50, for example. It does have some wrestling to do with the 20 and the 50 at the moment, so at least these are more in play and sort of sandwiching itself directly between those. We saw a similar setup here. And so if we look at like the MACD and the RSI there as well, that's when that happened. That thing we we're just talking about with the RSI, that's when that happened, when it previously sandwiched itself between the 20 and the 50 MAs. So like I said, this is why I think it's a pretty critical moment for DM to see if it's going to just sort of like repeat this history and potentially then fall back down lower than 670, or if it's going to be able to establish. And I think a lot of this is going to lie in what the RSI does here. and continue ahead. Lastly, let's take a look at the Ichimoku cloud, and we do see a potential interesting setup here. Now, if this gold conversion line here crosses over this yellow signal or yellow baseline here, that is a bullish signal. And it's looking like it's stretching that direction at the moment. That said, if that signal is thrown when the price action is below the cloud, it's a weaker buy signal than if it's throwing that buy signal and the price action is above the cloud. But it still is a buy signal nonetheless, and could show some strength for DM. The other thing that's sort of working in its favor, if we zoom back out here a little bit, is it's throwing that bullish crossover at a time when the resistance of the cloud is relatively low. The thicker the cloud, the stronger the support or resistance. Support if the price action is above, resistance if it's below. Now, this doesn't mean, of course, that the price can't work its way through the cloud, even on a thick cloud like this. Of course it can, but it's just how strong the indicator is saying the resistance is. And so if it was able to throw a bullish crossover here and work itself through, like I said, a relatively narrow cloud compared to this, for example, then that could give it the opportunity to establish through these clouds, and then these clouds would give it some additional support on the downside to try to work itself up. But if it's going to do that at this juncture, it's going to need to get itself to somewhere between like $8.60 and $9 to get itself over there. So it'd be a pretty significant percentage change to the upside to work its way through there over the course of the next, say, week and a half or so, maybe 2 weeks. So, but just sort of an interesting setup there. So we have bullish crossover in the MACD, RSI really wrestling, sandwiched between the 20 and the 50 MA, so treating one as support and the other as resistance, and then Ichimoku cloud throwing a weak buy signal with some weak-ish resistance to the upside. So that's the recap of the indicators. Now let's put in some trend details here. Okay, so let's zoom out a bit and see what this downtrend looks like. So there's clearly, I'm going to put this in as a ray just to see where this situates itself. Okay, so we need to kind of, I don't know if we can come from here. No, that's not going to make sense. Okay, so it's going to be, I do these in real time in the hopes that like it's helpful for folks to see and they can kind of use it for, their own charting purposes. That's the goal, right? Learn to fish. Now this looks like it would stretch back to me. Let's see. Okay, yeah. Perfect. Okay, so this was the downtrend, and it can be useful sometimes to plot these downtrend resistance lines or uptrend support lines, whatever, that they've recently broken out of, because right now it has an opportunity to break out, and it's also trying to put in sort of one cup and then also sort of a stronger cup, and it's all in this area here. So it's essentially trying to, it looks like to me, put in couple of match swing highs. So you see this scoop here, right? That's the larger cup. And then we have this scoop here, which is the smaller cup. So I would say that as for strong resistance levels, this one is going to be one here. And especially so because we see, I'm going to get rid of this rectangle so we don't really need it. Especially because we see resistance that was previous support over here, right? I don't know if this tracks back to anything that's useful. Not really, because it's lost so much in price. But that's really significant. Resistance that pivoted, flipped to support, and then pivoted back to resistance. And now it's coming back to approach that again at about 793. So that would be the first really strong level. And then the other one that I look at would be right about here, 889. Resistance that flipped, support that flipped to resistance and then came back and retested that resistance and then fell off further. So to me, those are the two very clear near-term resistance points. And we could put one more above just in case we don't get to return to this super soon. But the next one I would look at would be, I mean, it's not really as strong potentially. It could be strong because it's a lot of price percentage-wise to move through. So 960, it's mostly just resistance there, right? Let's see if it's previous. I mean, it's near support there. And yeah, just a bunch of near support, but nothing super impactful in the history. But the 960 could provide some friction for sure as it tries to pass through there, if and when that happens. Because previous topping out here, but even like I said, just because a 70-cent move in a stock that's under $10 is a pretty solid percentage gain. So it could just be the fact of sort of like, buy pressure exhaustion sort of kicking in around that area. Now there is one other level that I look at. So it's broken that previous downtrend resistance. Now this is very nascent, so we'll have to see what happens here, but it looks like it wants to start establishing this sort of uptrend, new trend, and this is obviously the cup that we're talking about, right? So this would mean that this is going to wedge out, and this, if it continues up this support trend line, this would essentially be putting in two ascending triangles to break through. So it would hit this 793 previous topping out and have an opportunity to really burst through there. And then if it continues to work up, it would have the same type of setup at 889. Now, whether or not it can hold this level of, I guess, steep-ish trend line, I mean, this was put together basically by a 5.65% green day and then just a under 1% red day, and now up nearly 3% again today. So for a stock that's been beaten down so much, I mean, it's trying to put together, a bit of a run like we saw here, but obviously that can also die off and reject pretty hard like we saw at that point. I mean, you could have been putting the same trend line in here basically, right? You could have been putting, I won't leave this on the chart because it's just going to clutter it up, but you could have been putting in like this and saying like, okay, here's its opportunity to break through to the top. But what did it do? It got to that point and it actually broke the other direction, and a strong break. And that's what we look for in these sort of wedges or triangles, are strong breaks. It's just certain setups tend to break bullish, certain setups tend to break bearish. That doesn't mean that they always break that direction. But it's sort of like always a game of chance and probability, right? So this is what I see before we flip over to the data. This is what I see. Previous trend break. Now it's trying to consolidate and build a base slash shift trend. So shift to the upside by following this upward trend line, but it's going to have these key critical areas that it's going to hit, and it's going to have to decide what's the big move there. Is it a big move back down? And if so, we could very well see it fall below previous support, or is it able to make a break to the upside at this point? Okay, now let's flip over to the data. So look at old Ortex here. So good thing for, the sway that any analysts have with getting retail to come in or getting institutions to come in, or both. Bunch of return potential to the upside that folks could be looking at here. That said, it's a pretty mixed bag, 3 buys, 2 holds, and a sell. So not the most tremendous. And the price change has gone down a little over 5% the last month. So that's continuing to draw down in the face of a lot of return potential per analyst's consensus ratings. Now, here's the story on the short side of things. So you have a few factors here that start to lead up to like squeeze potential, but I'll sort of point out where the real drawback in that is. So here's the estimated short interest. So right now, Ortex is estimating that short sellers increased positions by about 13% today. to now over 20%. So it's very, very high. Historically speaking, I consider over 10% to be high. So over 20% is like, whoa. And utilization is not quite at 50. So there's still a ton of shares left for short sellers to borrow to put sort of short and distort selling pressure optics into the visible price that we would see. So obviously short sellers piling in today because they think that there's more to be had here, and they've obviously put a lot of pressure on this stock and probably have accumulated significant profits. But to their mind, it seems as though they feel as though they're not done yet. And because this was able to come up over 5% and then over 2%, within the same week, it's I guess they're feeling as though they can come in and squeeze the lemon again. Now, the days to cover is also sort of not in an insignificant place. So they're holding on to these for several days, and before they're closing their position. So again, that's sort of like a recipe for compiling or building up of the short interest as a percentage of the free float. Now, here's where there's the issue with sort of like effectuating something like a short squeeze until this last component gets into place. This cost to borrow is very, very low. 1.21 is almost zero, obviously. And even today it came down from 7 days ago. And that doesn't put any additional pressure on short sellers. Need a pressure coming from a bunch of different places. They need pressure coming from not many shares left to borrow, so utilization getting close to 100. They need pressure from the price that is just sort of like relentlessly going up and just is not giving in to that short selling pressure. And so they're just constantly into water. And then the thing that will tend to tip the scales is the cost to borrow is very high. So it's very expensive for them to hold on to these shares. Right now, there's no disincentive for them to hold these shares for several days and then wait for the stock to get pushed down and then sell for a profit, even though they have, some cost to borrow, but it's just so close to zero that it's not really making an impact. So if we see the cost to borrow continue to climb while the utilization climbs, which would then impact this number as well, that would be rising. The downside to that obviously is there will be a lot of perceived selling pressure on the public facing market. And so this could appear as though, the stock is dropping further and further and further, which is probably pretty tough for people who, there's probably a lot of folks who feel like bag holders in this stock, right? I mean, that's a significant pushback. And so that's the downside, right? Just because there's a setup there where it seems like shorts are over leveraged, it doesn't mean that they can't just easily win that battle. So that's the flip side of that coin. Folks want to effectuate a short squeeze, but like I always tell people, like the other edge to that sword blade is that they're going to do a lot of damage, like in the meantime. And do you want to just continue holding on and not knowing if you're going to be able to squeeze while the stock continues to get pushed down further and further in price? So that's the way that I see it. But like I said, I don't think there's anything to do on the short side of things until you see that cost to borrow change, or you see shorts just sort of like give up and pack up their bags and go home because the stock price continues to push up, which to me, that's probably the better case scenario. You won't get that outsized sort of like squeeze and turn around 100% gains or something like that. But this could just sort of more naturally, organically put the stock back on a better path and better footing for the future. All right, folks, I hope you had a good trading day and that you're able to finish the week off strong tomorrow. And I appreciate you watching. I will see you in the next video.